Hello, and thanks for joining me today on Coping with COVID. That's the podcast every day from the newsroom of Business in Vancouver. I'm Kirk LaPointe, the publisher and editor-in-chief. We're, of course, in the early stages of comprehending the economic impact of COVID-19. The Conference Board of Canada, though, has released its latest estimates and projections, a bit of an update on some earlier ones, and they make for some very sobering information in this challenging time. The board report is titled Economic Implications of Social Distancing, and Pedro Yatunes is a chief economist for the Conference Board. He joins me now. Good to have you with us.
Oh, well, thanks for having me. It's a pleasure.
Well, look, I know we can often get a little hyped up over this, but I think it's a reasonable question to ask. Have we ever seen anything like this?
Oh, goodness. Certainly not in my forecasting experience. I've been at it for pretty near 30 years now, and I've never seen anything like this at all. Even the 2008-2009 recession, which was a very deep recession, and it was in some ways similar in that it was a global recession, very synchronized global recession. But this is different in the sense that a lot of the economic impacts really are the restraint measures that we're kind of self-imposing on ourselves. But more importantly, they're essentially bringing a halt to many sectors across the economy. And our typical tools and models that we use to kind of get a sense of what the economy is doing, they're very at the margin kind of. We never really shut down a whole industry. So this is
you're almost going to have to rewrite rules, aren't you? You rewrite the rules of how you assess things that have economic impacts.
Well, I think, yeah, once we see how the data come out of this, because again, a lot of the information that we have is very lagging. Statistics Canada is producing data now for January and February still, where we don't know yet where March will land. We're getting some indicators that have come out from China, for example, about the depth of the economic impacts. We're getting a handle every day on how big this is going to be. And I think what's really important here is it's going to be very deep. In other words, while these measures are really the strong measures that we see right now are put in place, hopefully that will not last, too much longer. I think in our assumptions here, we're seeing these kind of deep social distancing measures in place until about the end of August. And so they will have big impacts in the second and third quarter.
Yeah,
but we also think that go ahead, please.
End of August, my goodness, huh? End of August, that just seems like an eternity away.
Well, and again, there's a lot of uncertainty there. So you mentioned we did two scenarios. We had one, our first scenario, where we thought, well, maybe these things will go by fairly quickly. But now we're thinking that perhaps, especially some of the measures, for example, the ones that would see, restaurants reopening or travel and tourism reopening, probably those measures will last longer than some others. But nonetheless, these are big impacts on those specific industries. And again, a deep impact the second and third quarter. And what I was going to say is that we are hopeful that once the crisis is behind us, that assuming that all these measures really hold the economy together for that period, then we should bounce back fairly quickly. This is different than a financial crisis that we had in 2008, 2009. Should be able to bounce back.
Yeah, I mean, you've taken notches off, of course, the projections for this year, and your projection next year is quite healthy. I think it's something, 3.3% in terms of GDP growth, which kind of gets us back out of that hole and forward a bit. But, I recall just only a month ago, I think, covering the British Columbia annual budget, and we were looking at surpluses and, 2% or so growth rate for the year and all of that. The different complexion about this, Pedro, that I wonder about is, compared to, say, 2008 and 2009, was that on those days, people were still going to work. The market had convulsed, and yes, there was all sorts of wealth lost on paper, and a lot of companies very quickly closing because of particularly the housing and mortgage crisis in the United States that seemed to precipitate some of this. But arguably, I mean, that was just a different social dynamic than what we're experiencing now. Is there really, in your view, an effective way to project ourselves along on this one when we just have so much dormant industry?
Yeah, well, and again, we talked about the similarities in the sense that they're global. These two shocks, the 2008, 2009 financial crisis, and the COVID crisis we're feeling now. But that's the end of the similarities. I think they're very different in the sense of what's causing the decline. And here, as we know, it's these self-imposed and imposed and self-imposed social distancing measures. And the way we talk about this in the economics jargon, it's really a demand shock. It is, essentially consumers holding back. This is how we're going to, appreciate the impacts on the economy. As people are essentially holding back on tourism, on purchasing items in restaurants and beverage service industries. And we're seeing big impacts on retail. We are also seeing some supply side impacts. We talked early on about China and its impacts on the supply chain in North America and elsewhere. But I think those are lesser right now than this kind of big pullback in spending. So the way we see this panning out essentially is that, the other piece that we haven't talked a lot about yet is, the fiscal and monetary policy response. And the fiscal response now is huge. We're talking about just in transfers to persons. In other words, when people aren't working now, they're going to be getting money from the government that's equivalent to 2.5% of GDP right now. At least that's the flexibility around that relief package. So the income will be there. People won't be spending. And what happens then? It goes into your savings, and we're going to see this show up in towards the aggregate savings, and that'll give people room to maneuver once the crisis is over to spend that money. It's this pent up demand that we're going to have for goods, for products, for cars, for real estate. This should bounce back once the crisis is over.
Do you have a sense yet as an economist on whether COVID-19 has revealed to us anything about the state of our economy, about whether it was actually kind of more precarious than we might have thought, that the stability of the run that we've had for really nearly a dozen years now was in fact a little bit flimsier than we thought?
Well, I think I don't know if I'd say that. I do think that we have had some problems with our economy, some things that haven't been working out terrifically well, for sure. But generally speaking, when we think about the progress that's been made, these issues, these trends around globalization, the adoption of technology, all of these things I think have been positive. And what I think is going to emanate from this COVID crisis is we're going to see perhaps some of these technologies being more fully adopted going forward. We're talking about people's abilities to work from home. I know that we're hearing about e-commerce from China. I mean, China, I think Chinese have been earlier adopters than Canadians about purchasing things through e-commerce. So I think we're going to see some changes going forward that will probably use this a lot more. But there's all other things like consulting your doctor. You can do that online a lot more. Perhaps in the education system, we'll adopt more technology so that people don't have to necessarily commute to be able to essentially do their schooling. So those are some of the things I think that will affect the economy going forward. Those could be positive in terms of more efficiencies, less commute times, and obviously less impact on the environment as well. But there are other implications, right? When we think about shortening global supply chains, which people are talking about, and in other words, the benefits of globalization, we could see those pulled back a little bit.
I mean, and where businesses are holding more inventory and that kind of thing, maybe a little bit more wary of that supply chain stability.
Yeah, well, that's a good point. And I think we saw some of that with the rail, first the rail strike that we had, and then the transportation bottlenecks essentially that we had earlier this year. But yes, I mean, companies have been running, all through the supply chain, been running more and more very efficient logistics on the transportation sector, allowing us to be very efficient on inventories. So that's less costly for firms. If they are going to start keeping more inventories, that's going to be more costly, and eventually it'll pan out through to consumer prices. Same thing with kind of repatriating, if that's the trend, supply chains. So I think we need to think about those things longer term and how this crisis will change some of these adoption of technologies, but also the supply chain issues.
I mean, economics is often a bit of a behavioral science as well. I mean, you're studying human behavior and all of this, and you as a chief economist at the board would be really quite front and center in understanding that. Do you have some theories yet on what kind of repairs the psyche here for the consumer and makes the consumer be demanding again?
Well, I don't know that the economics is a perfect science to get around that question or to get a handle on that question. I do think that in general, human nature is that we adapt and we get used to the environment that we're in. And, I think that right now people are feeling very stressed, that they're holding back on consumption. They're very concerned about what will the future hold in a few weeks or a few months down the road. But I do think that we will get through this. This may be a bit longer in terms of the way we do business on a day-to-day basis or interact with other people on a day-to-day basis. It may last a little bit longer than we might have wanted, but nonetheless, I think we will adapt to that even in the shorter run. Economics is in my field, it's what we call the macroeconomy. So it's the aggregate way that consumers respond to things. And I do think a lot of things will return to normal once the crisis is over. So this idea that if the income is there, if people, don't suffer too badly, if we can stay off bankruptcies, for example, for households and businesses, that those patterns will come back, and once income is there and the economy is or the crisis is over, people will go back to spending.
And the one thing, Pedro, that I think we've noticed in studying other countries as they've gone into the throes of COVID-19 is, of course, the stress on the healthcare system, of course, on the economy. And I wonder whether maybe as some of them start coming out of their crises, whether we're going to, in a sense, be a little bit faster, a little better prepared to come out of it ourselves, just behaviorally.
Yeah, I think we're certainly seeing some areas of the world, South Korea and certainly China within the Hubei region, where they were very much most affected. Not so much anymore, but they have seen essentially the number of new cases almost flatten out to nothing. And I think when we think about China, for example, the concern now is about the virus coming in from outside back into the country. So I do think that. One of the things that we need to keep in mind is that until we find a vaccine, I guess, or until 30% or 40% of whatever the requirement is from the experts in health, certainly not me, of the population gets infected, we're not going to get through. We're not going to be able to let down our guard completely. So I do think people should be ready for kind of a longer term, at least on some of the measures that we have to contain the virus. Probably things like travel, who knows, around borders, et cetera, restaurants and these other social gatherings. So, I do think this may last a little bit longer than we initially thought. And this is part of the reason why we're looking at this scenario where the measures are in place for longer. But again, I do think sooner or later that the crisis will be behind us.
Yeah. I mean, you alluded earlier to the fact that obviously with income support, that alleviates one of the principal tension points for people in this difficult time. If they're worried about their jobs disappearing, there is some income support in there. Might we also see a bit of a changed habit there among Canadians, where we'll be thinking a lot more consciously about how much household debt we're carrying and how vulnerable we might be, because there are going to be other coronaviruses.
Mm-hmm. Well, that's a really interesting piece. I think, when I talk about how households have, essentially taken on a lot of debt over the last number of years, I find that they've been really quite rational. If you were to put money into a bank account, you're not going to even get enough to cover inflation. So there's a real loss there in terms of your savings. What have people been doing? They've been taking advantage of low interest rates, leveraging themselves extremely, very highly to get into real estate. And of course, real estate prices, especially in some key markets, have been doing very well. So the wealth is there for households in there, but it's locked up in their real estate. And I do think that's a bit risky. And certainly going forward now, we're going to see households probably get into further debt with this crisis, this economic crisis that we're in right now. Interest rates are, again, very low. So it's not a huge burden right now. But looking ahead, as we look past the crisis and as we look at the economy starting to motor ahead, I do think households need to take a look at their nest eggs and their savings and their ability to get through crisis. And perhaps this will be a lesson, a longer term lesson from this really unfortunate situation.
Yeah, and before we go, I want to ask you a little bit about the resource sector. I mean, obviously, it's so critical here in British Columbia, as it is naturally in Alberta too. And we're back to gas prices here in Vancouver that we haven't seen really in about 15 years, and we're bound to see lower. But ultimately, that's giving us a bit of an illusion about what kind of consumer saving really means in this case. What needs to happen there, do you think, in order to relaunch oil and energy and in a way that's going to put ourselves back into the picture that we like to have in the West, which is is a bit of an engine of this country at times? Yeah.
Well, you do bring up a couple of really interesting points, and that is that we used to think, if you think back in history, an oil price shock was problematic when oil prices went sky high, and oil and energy are essentially the inputs into pretty much everything that we produce. So not just transportation, but a lot of the goods and products that we have use oil as a base for the production line. So an oil price shock that we've had now, the decline in oil prices, can be positive for certainly some economies that are net oil or net energy importers. And for households, they'll see lower inflation. This is going to have some offsetting impact. But of course, for Canada as a whole, we are a net energy exporter. And for some provinces, obviously, a decline in oil and a decline in resource prices, as we've seen, are net negative. So this is going to hurt some of the resource provinces more so than others. And so when we think about Alberta, Saskatchewan, Newfoundland, Labrador in terms of oil, British Columbia, of course, also very heavily into the energy side, but more so on the gas. But the mining sector, et cetera, when global demand slows, demand for commodities slows and prices comes down, and this is having an impact. Where I would give some reassurance is that we do feel that demand for oil is going to be strong going forward. We are looking at moving away from coal as the main global method to get away from or to reduce greenhouse gas emissions. But in the interim, I think oil is still going to be a commodity in demand. And let's not forget, the global economy, the global population is still growing by 120 million people a year. And mostly in Asia and mostly in parts of the world that are getting wealthier, and they are going to be needing resources.
Yeah. Last question, and I don't mean this in a frivolous way, but you've had to, in a sense, scratch out your earlier projections, release a new report. Do you think you're going to be doing this a couple of more times before we're done this?
Yeah. There's no doubt. There's no doubt. Just yesterday we saw. Was it yesterday or the day before? But essentially the Federal Reserve, the government of the U.S. announcing a $2 trillion package. We've had a package ramping up here in Canada, but then again we're also seeing negatives that we didn't expect. We are seeing, for example, mine closures. Not so much because prices or demand is weaker, but essentially because there are not an essential industry, and they want to avoid or put in place social distancing measures that are essentially shutting down some industries that we didn't expect firsthand. The other piece, of course, is we are seeing now unemployment insurance claims that we didn't expect. 500,000 in just a few hours or a few days or a week or so. Now we're up to 1 million, and now this package is talking about essentially 4 million people possibly applying for this relief. So, every day we're getting these different bits of information that we'll put into the forecast. And then the other piece that I think is really going to keep us on our toes is, how long this lasts. How long before we can contain this within Canada? May be short-lived, but then what measures stay in place for a longer period of time? When does the vaccine arrive?
Yeah, boy, a long time ahead, I think. Pedro, good to have you with us. Thanks so much for your time today. We'll be looking forward to what you next produce in the way of some projections to help us understand how to navigate all of this. Thanks so much for your time.
Well, thanks for having me. It was a pleasure.
Pedro Yatunes is the Chief Economist with the Conference Board of Canada. I'm Kirk LaPointe, Publisher and Editor-in-Chief at Business in Vancouver. Thanks a lot for joining us today on Coping with COVID. We'll see you again.